Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, ICE Brent crude oil futures. A second bullish white soldier yesterday after the previous session's immediate countering bullish thrusting pattern. The market remains somewhat stuck, unsurprisingly, within stratified and layered overhead congestion stretching up from 68.69 up to 72.29, and prices failed once again to push up through it, closing higher but barely within the overhead congestion. This continued failure to really push up through this congestion despite the higher low may be telling, especially for target X overhead at 73 1/4. And that's the doubling up of the recent break above the dark blue May and July 2025 to January 2026 bear channel. It's currently 55.98 to 64.21. Below we have additional support from the bright red neckline extension, currently at 66.51, to the March to May 2020 reverse head and shoulders bottom, plus the slowly rising gold long moving average, currently at 65.98. However, the most interesting recent pattern has been the breached and repaired December-based bright green bullish Andrews pitchfork, with the market right now just above the bright green middle tine, below, currently at 68.44. So far today, a dip down to the combination of the bright green middle tine and the July 2021 low at 68.69, but not venturing lower, and prices have reverted to around unchanged. Spot gold. A bullish opening white Mariboso and second bullish white soldier yesterday after the previous session's immediate countering bullish piercing line pattern. A bullish double. Now prices, which had earlier closed up over the wide stratified congestion between 47.41 to 49.43, now use that as a base to push up through the significant late January 50% Fibonacci line at 49.99 and close just under the 38.2% Fibonacci line for the same move at 50.88. Now this 38.2% Fibonacci line seems to be a significant local resistance, as it also capped prices last week. The big overall patterns here had been the late January V-top, along with subsequent bounce up from the 50% Fibonacci line of the late May 25 to late January 26 move of 44.20, which was aided by the October 2025 highs in the 43.80 zone. However, between these two patterns, I've been able to draw a bright new late December to early February 2026 dark blue bullish Andrews pitchfork, which I think might be able to show the potentially bullish angle attack of this market. It is early on, and I may finesse this still to a shallower bullish shift pitchfork for the same move. But right now we're in between the overhead dark blue middle tine above, currently at 52.34, and a dark blue lower tine below, currently at 46.01. Now, we've had a pullback lower today to that 50% Fibonacci line at 49.99, but not really pushing it down through it so far and reverting back up again. Bitcoin. An indecisive doji cross pattern yesterday after the previous session's third countering bullish Harami and borderline bullish opening white Mariboso. Okay, so a lot has happened here, and it seems, just for now, we are calming down a bit and taking stock on what has been achieved and what is still lying open. In the immediate past, we have reached the primary target X3 in the 850 zone and the secondary hardest reach target X4 down in the 76030 zone for the January lopsided head and shoulders top pattern. This was part of the break lower from the failed bullish cup with handle pattern from December last year to January this year, which ended up as a very large bearish halfway hesitation, an October 2025 to date bearish halfway hesitation. The main hesitation part was captured overhead by the resistance of the neckline, currently at 88,654 of the November 24 to February 25 double top, and sort of by the neckline extension, currently at 84,072 of the small January lopsided head and shoulders top, plus the significant move below the 61.8% absolute Fibonacci line at 78,028, and then also the monthly key reversal down in January. All these moves lower tied in with the big, possibly as far back as October last year, big bearish halfway hesitation. And we've already reached a number of the targets below for this pattern. And that's a primary target X down in the 72,100 zone, as well as a harder to reach secondary target X1 down in the 64,000 zone. This leaves us with the tertiary, much harder to reach target X2 down in the 54,000 zone. Now the dip last week below the 50% absolute Fibonacci line at 63,129 helped these targets below, as did the close below it, but it was only the one close, and prices have not stabilized down there, instead stretching up back up to the 50% Fibonacci line of November 22 to January 22, November 22 to January 23 move, which is head and shoulders top at 70,929. We also now have to consider two other features below too. The bright red neckline, currently at 67,276 of the August 2021 to January 22 head and shoulders top, plus the bright green early October 25 to mid-January 26 bearish Andrews pitchfork, with the market today in between the overhead bright green upper time, currently at 84,377, and the bright green middle time below, currently at 61,948. I am quite prepared to look at this as a potential way of showing the bullish angle of a bearish angle of attack, but I'm of course quite prepared to finesse this into a shallower bearish shift pitchfork for the same move should it be required. Now, so far today we're a test down to the congestion. It's a narrow band of congestion between 68,977 and 69,136, and it's based around the November 2021 high at 68,977. But we've done no more than that right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.